In today's video, we will provide a detailed overview of the current state of the United States in April 2025, focusing on three critical areas: the economy, immigration, and international relations. These interconnected issues are shaping the country's direction and influencing both domestic stability and global perception. Slowing economic growth, stricter immigration enforcement, and rising trade tensions with major global players are creating a landscape of uncertainty. Understanding these developments offers a clearer picture of the challenges the U.S. faces and the potential paths it may take in the near future. As of early 2025, the U.S. economy is experiencing a notable slowdown. After several years of relatively strong growth, real GDP expansion has tapered off significantly. Current forecasts hope for annual growth of around 1.8 to 1.9%, down from previous averages of 2.8 to 2.9%. This deceleration is the result of a combination of domestic policy changes, higher trade tariffs, and an increasingly uncertain global environment. Analysts, including those from the International Monetary Fund, or IMF, have cited high levels of policy uncertainty as one of the key obstacles to economic momentum. Business investments have slowed, consumer confidence has dipped, and companies are becoming more cautious in their planning. One of the most visible signs of the economic slowdown is the labor market. Job creation has weakened, and hiring across many sectors has slowed down. While there are still new opportunities emerging, particularly in industries driven by clean energy, automation, and digital services. These gains are being offset by job losses caused by restructuring and increased reliance on technology. Hybrid and remote work models, which became common during the pandemic years, continue to be widely adopted, but they have not been enough to drive strong employment gains. Looking ahead, the national unemployment rate is projected to rise gradually, reaching approximately 4.5% by 2026. Inflation, another major economic concern, has somewhat stabilized compared to previous years. As of February 2025, the annual inflation rate stood at 2.8%, with expectations for a slight decline to 2.6% by March. However, recent rounds of tariffs, particularly those targeting imports from China and global steel and aluminum producers, are likely to push prices higher again in the near future. This creates a complex challenge for the Federal Reserve, which is expected to cut interest rates modestly to support growth. But if inflation begins to accelerate, the central bank's room to maneuver will be limited, forcing policymakers to walk a tightrope between stimulating the economy and keeping prices in check. Immigration policy has become significantly more restrictive in recent months. Between March and April 2025 alone, the federal government canceled over 1.5 million immigrant visas. This move reflects a broader strategy of tightening immigration enforcement and reducing the number of new entrants into the country. The immediate effect is a reduction in labor force growth, which could have longer-term consequences for industries that rely heavily on immigrant labor, including agriculture, hospitality, construction, and healthcare. These policy changes also affect the broader economy. A shrinking labor pool may contribute to slower economic expansion and could drive up labor costs for employers. Many businesses are already voicing concerns about labor shortages and the difficulty of finding qualified workers, especially in areas that have historically depended on a steady flow of immigrant workers to meet demand. In the short term, these policies may also impact productivity, consumer spending, and overall economic resilience. The United States is also facing a more complex and contentious global environment. Trade tensions are intensifying, particularly with China, but the effects are being felt across multiple international partnerships. The imposition of new tariffs on a wide range of goods has led to retaliation by other countries and increased volatility in global trade. These developments are contributing to market uncertainty and are seen as a drag on U.S. economic growth. In addition to trade, the global perception of the United States is shifting. Foreign investors are becoming more cautious, viewing the political environment as increasingly unpredictable. This has led to greater hesitation in international financial markets, where the dollar's strength has shown signs of weakening. Prices for U.S. assets are becoming more volatile, as investors react to changing policies and diplomatic developments. The U.S. stock market, in particular, has entered a period of correction, marked by falling prices and increased investor anxiety. Ongoing diplomatic efforts in areas like Ukraine, the Middle East, and Iran are also facing challenges. The effectiveness of U.S. foreign policy is being tested, and questions are being raised about the country's ability to maintain its traditional leadership role on the world stage, whether through trade negotiations, defense alliances, or multilateral diplomacy. The outcomes of these efforts will significantly influence America's international standing in the coming years. Looking forward into the remainder of 2025 and into 2026, the U.S. economy is expected to continue growing, but at a slow and uneven pace. Most forecasts suggest that while a full-blown recession is unlikely, the country is not on track for a robust recovery either. The outlook is best described as one of cautious muddling through, with moderate growth and persistent risks. The dominant risks facing the economy include a further escalation of the trade war, unexpected spikes in inflation, and declining investor confidence. Financial markets could become more unstable, and a loss of global trust in the U.S. policy direction could deepen these problems. On the policy side, the Federal Reserve may continue to lower interest rates to support growth, but its flexibility is limited by inflation concerns. Meanwhile, the federal government may pursue expansionary fiscal policies, such as tax cuts or increased spending, to prevent a more serious economic slowdown. On immigration, tighter enforcement is expected to persist, potentially leading to labor shortages and slower productivity in key sectors. And in foreign affairs, outcomes remain highly uncertain, while trade talks may eventually lead to some rollbacks of tariffs or renewed agreements. The process is likely to be slow and heavily influenced by domestic political considerations and international reactions. The United States is currently experiencing slower economic growth, stricter immigration policies, and heightened global tensions. Economic indicators suggest a cooling economy with growing uncertainty around inflation, interest rates, and labor market strength. Immigration enforcement is becoming more aggressive, impacting both demographics and labor force participation. On the international front, trade wars and investor caution are weakening global confidence in the U.S. economy. While a deep recession is not currently forecast, the risks to both economic performance and geopolitical stability remain high. The near future will require careful balancing of policies to maintain domestic strength while rebuilding global trust and economic momentum. If you enjoyed this video, hit that like button and subscribe. Thanks for watching. We'll see you at the next one.